All right, welcome back to another episode of Mike and Matt's Markets and Mortgages. I'm Matt Haberly, Regional Manager of Success Mortgage.
And I'm Mike Kremner. I'm Virginia Regional Manager with Coldwell Banker Premier. Good to see you, Matt.
Always good to see you, Mike.
So, what do we got today? I heard you've got something you want to share with everybody.
Yeah, so I really wanted to put this out there. This is an awesome thing. Quite exciting and kind of just as a harbinger of what maybe next year is going to bring. And that's a exciting good thing opposed to most harbingers or bad things. But right now, one of our lenders is doing a special. They are offering 5.99 on what's called an FHA or a VA streamline loan.
Okay.
So this is a type of refinance. It's not a purchase, only refinance, just to be super crystal clear. But the nice thing about it is, unlike your standard refinance, you don't have to provide income documentations. There's no hard credit pull. There's no appraisal report. This is simply just, go ahead.
This is easy.
Oh yeah, this is, hey, we've seen already a couple of people get these done in 2 weeks because it's as soon as you can get me your application, essentially, I don't require all these other things and we don't have to wait on an appraisal to come back.
Okay.
But it's kind of huge and it's awesome. This will be going until January 31st. And when I say that, it just has to be submitted. It doesn't even have to be closed by January 31st. So I was thinking this would be an awesome opportunity for agents out there to use this as a tool.
Okay. Yeah, for sure. This is phenomenal news. So let's talk about what this can mean for the agents. Over the last year, Matt, what's the average rate been that you've seen? If you had to guess, I'm not putting you.
Yeah, don't hold me to it, but I would typically say it's about 7%. If you're doing let's just say an FHA loan, you're probably in the 7s, maybe 7.25 even.
Okay. Do you think there's people out there that have an 8?
Oh, guaranteed. You said average.
Yeah.
I guarantee there are people with 8s. You know, because that's right around September, I would say. We were hitting those in October. We were hitting those higher rates.
Yeah, and if I remember, it was kind of like June till August, and September is when the rates really kind of did this, and they go up in pretty big hikes. So, I mean, we're talking the last 15 to 18 months, we may have people that could benefit from this if they bought a house, right?
Yeah, I mean, not even the last year, but the year before. I mean, we were still, even those times we were hitting 6.75s, 6.99s. We were creeping up all last year. So in 2022. So, I mean, this really technically speaking, I think I mentioned this to you before, but there are crazy people. I don't understand how maybe they don't have TVs, but bought in 2009 when rates were, or a little bit before that, I'm sorry, 2005, who bought during that time period and had 8% rates and have never refinanced and just stuck with it for their whole life. This is for anybody who has higher than a 5.99 who wants to lower the rate and save money.
Yeah.
And actually, can I share one more cool thing about this? If you got your loan before April of last year, the mortgage insurance rate was 0.85, and then they lowered it down to 0.55. So let's just say 1 year ago today, you bought your house, you got a 7%. So not only are you getting a 1% off the rate, but you're actually lowering down the mortgage insurance payment 0.35. So now you're saving twice on that loan potentially.
That's phenomenal. I didn't even think of that component with it.
Oh yeah.
Okay. That's fantastic news. So we've got a whole bucket of people that we could reach out to, both agents and loan officers here, because this is the easiest touch point you can think of. Hey, would you like to save some money on your mortgage? You bought when rates were higher. You were waiting for the opportunity to refinance. All I have to do is tell you that a time that you could refinance is here. Maybe it's right for them, maybe it's not, but you're going to put the information in front of them and let them make that decision.
Well, I kind of look at it, it's one of those things like we do annual reviews of people's rates all the time, and we'll start taking a look like, okay, look, we got you in it here. Where are rates at today? Does this make sense or not? Sometimes it's just a good contact point for us loan officers to say, hey, I just want to let you know so many loan officers will look at this and then not make the phone call. I'll make the phone call anyways and say, hey, look, I looked at this as a possibility. I just want to let you know you're actually still in a good spot. It's not time yet. What do you got? What would you put as the equivalents for that on your side that you think the agents may be able to benefit from this?
I really think that agents should include this when they're doing their equity reviews and their tax time letters, because it may apply to the person that they're sending it to, but they may know somebody that could benefit from this. Maybe they have a friend or a family member that bought something. And a lot of times the agent will very passively say, I don't know, I've got to check with the lender and see what we can do here. I don't stay on top of the loan products, and they'll try to pass it off. Well, you're putting it right here in front of us that there's a product today that may be a solution for people. And all we have to do is say, hey, I wanted to let you know this is out there. Maybe it works for you, maybe it doesn't, but I'll happily put you in touch with somebody that can help.
Yeah, just to even show you care. Like, hey, I saw this, made me think of you. Yeah. I know when we did, and maybe you don't even know what the rate was. I know you said it was high and you wanted to eventually bring it down. Hey, my lender sent me something, and you're, you know what, Mike? You're the first name that popped in my head because you're always on my mind, even though I hadn't done that deal for you in 9 months. But I'm thinking about you every day, and I thought of you when this came across my desk. So
that's exactly right. I think that what we have here is a win-win-win. This is phenomenal. So you said that it's a soft credit pool.
That's correct.
That?
Yep.
There's very limited documentation.
Mm-hmm.
What do the closing costs and stuff look like here? Are people like having to shell out $7-8 grand to make this happen, or is this?
No. Okay. So the nice thing is, again, when you're typically talking about closing costs, you're talking about the down payment, title, escrow, settlement, and then basically because a lot with VA and FHA loans, they have impounds. Well, one thing I do want people to know, you do have to set up a new impound account. Now, when they set that new impound account up, what will happen is they'll close down the old one and they'll send you a check in 3 weeks. Okay. Then they'll set up the new one, before that. And then that's in the settlement and title are the only things you really have to worry about. And depending on how much equity you've gained in the house and with the limited supply on the market, prices have still been going up. So people are still gaining equity. You may be able to go ahead and roll those into the loan. The nice thing is if for any reason you can't, this will more likely than not allow you to skip one mortgage payment. And because you're skipping one mortgage payment, essentially those same amount of funds can be used towards paying the title and settlement. Once your new payment starts up, you're saving 100, 200, whatever it is your specific case is, them going forward.
Wow. Okay. So you can even potentially forego a mortgage payment because of taking advantage of this opportunity.
Yeah. So potentially you could lower your mortgage payment, your interest rate on your mortgage, lower your mortgage insurance payment by lowering that rate, roll all your taxes and insurance so nothing's coming out of your pocket, and skip a mortgage payment on top of that.
This is too easy. This is a huge product. And Matt, you and I were talking the other day, we were talking about comparing rates, and I kind of want to give a comparison here of why I'm so excited about this. We sold houses in our area, or so around the Winchester, Virginia area. $450,000 is a nice typical American home. There's certainly some that are a lot more expensive, and there's some that are not quite as expensive. That's not really a townhome in this area. That's a traditional freestanding house. $450,000. We talked about a 7.99% interest rate going to this 5.99, right? Mm-hmm. And we saw the payment drop roughly $600 a month.
$600.
So that is a significant savings. And we're in a time of year where people are spending lots of money because it's been the holidays and Christmas time, and I'm going to buy a treadmill because I'm going to get fit in 2024 or whatever it is. People are just spending.
I don't appreciate the mockery, Mike.
You didn't.
I'm going to do it. I'm going to do it.
I'm going to sometime.
Yeah.
Just got to get my clothes off my exercise bike first.
Exactly.
But people spend a lot of money this time of year. And so you are giving them an opportunity to start next year. Maybe their goal is to eliminate a bunch of debt. Maybe their goal is to save a bunch of money to buy something, go on a vacation, do whatever. $600 in that example is real money. Skipping a mortgage payment, the mortgage payment on that $450,000 house was somewhere around $2,600, $3,000. When you give an example of that.
Well, it was $3,000 if they're still at that old payment.
Yep.
So they're really missing out on that, and then dropping down to 26.
So we're talking missing a mortgage payment potentially. That may not be for everybody.
That's almost for everybody unless you just don't make your mortgage payments. So I'll be honest, it's pretty much 99.9% unless you get a weird one. you're going to miss a mortgage payment.
Okay. I mean, so there you go. In that example, that's $3,000 and then $600 a month. So 600 times 12 months, that's $7,200 a year that people are just paying in interest. They're not adding that to the value of their house. They're not gaining equity with that. They're pounding off their interest. And that's real money. I mean, you're talking well over $100,000 of the life of the mortgage if they stay there forever. That money can go to anything else that they want to in their life. This is the type of valuable touch point that we've been waiting for. Everybody said, oh, marry the house, date the rate. Well, guess what? A decent rate is here for many people's eyes and lives. So we want to share this with everybody. In fact, I talked to somebody that loves sharing information like this because it may not work for the person they sent it to, but it could work for their nephew, their coworker, their friend, their mom and dad, whatever it could be. This is huge, Matt. What do you need from the agents to be able to get somebody teed up to take advantage of this? What do you need from us?
Name, phone number, maybe email address. I mean, here's always my personal recommendation is so first of all, agents, I would just play it safe. Don't quote rate.
Yep.
But you can, and I'll be sending this out to everybody. So when I send out this video, I will have this attached. You can share this flyer with all your clients and say, hey, my lender's got this great deal. I think it could potentially reduce your rate. Let me send it over to you. Check it out. And if you'd like, what I'll do is, write an email. So Mike writes an email. Hey, I want to introduce you to Mr. So-and-so, Matt. He saw your flyer about lowering down his rate to 5.99, and he's interested in getting, taking a look at if he qualifies for that. And that's as simple as it is. That's kind of my preference, because then I can say, oh, thanks, Mike, so much. And hey, Mr. So-and-so, when do you have a good time to talk? And we can discuss and see if you qualify.
Perfect. And that's awesome. And you know what, for the loan officer too, that gives the opportunity to have a conversation of like, so is this the forever home, or like, what's the goal look like? And it's like, oh man, I can't wait to get to Fort Lauderdale.
Right.
I have 145 more days that I'm working, and then I'm going off to sunrises and palm trees. It's like, oh, okay. Well, I'm licensed in Florida. Maybe you are. Or, maybe I can help you out with that process. And it gives you an idea of what's the runway look like where you could get further business from this individual down the road.
Well, we'll continue to open up the conversation in respects of if the loan officer, then once they start engaging, maybe this is not for them, because it starts that conversation back to what you were saying. What are your goals? Well, actually, I've been thinking about fixing up the basement. Well, actually, why don't we do a cash out refi? Or I'm really, yes, this would save me some money, but we could do the math and see that, hey, they could save even more money if maybe they paid off their debts through their loan doing a cash out refi. Maybe it's, hey, this is great, but I'm looking to move inside of 9 months. Well, then you can relay that information back to your agent. Hey, just to give you a hint, he's looking to move in the next 9 months. Maybe start having that conversation now that, what are you thinking about and what are your motivations for moving? So there's a conversation is opportunity.
Very, very sure. Yeah, that's awesome. Cool. This is huge. This is the kind of touch point that we've been waiting for. I mean, with everybody talking about how they're going to start off 2024, it doesn't get better than an opportunity of let me save you some money. So this is what we've been waiting for. I think that we need to be sending this information to anybody that bought a house with us in the last 15 to 18 months. I say that because they can share it. This is only for VA and FHA purchases, right?
Right.
They have to have had a VA or FHA loan.
What's that?
They have to have had a VA or FHA.
Yeah, this is going from FHA to FHA or VA to VA. You can't go from conventional over to FHA or something like. You can't change the product type.
Okay, I mean that's still fine. I don't see anything wrong with that at all. Because even if we do send it to somebody that bought a house with cash, guess what? They've got family, they've got friends that might say, oh man, like I was fortunate that I had cash, but look, this can put some money back in your pocket. And hopefully they're able to help tell that story. They'll be grateful that there's good information to share because the headlines have been full of nasty stuff.
Yeah.
Okay.
And the client then feels smart when they're telling their neighbor. It's just like back in the day when, they're, oh, I got this rate. Well, hey, did you know you could actually, hey, I know you bought your house 6-7 months ago. Did you know you can get a lower rate? Oh, well, my great realtor told me about this program. I guess I just know all the really great, important people. Wish you knew them, kind of bragging rights for them.
Yeah, for sure. I'm with you. This is great news, Matt. I appreciate it. Give me again, what's the rundown that you need from us? You need name, phone number, and email so that we can tee up the conversation with people that matters.
Yep, pretty much. That's pretty much it. If you're just sending us that, that's good enough. But I think it's a lot more effective if you do an intro email or an intro text message, introducing us to the borrower, saying, "Hey, I want to share. This is the guy I was telling you who can get you into this program."
Okay, perfect. It's just FHA to FHA, VA to VA. We have till January 31st.
Right.
Okay, perfect. Can you do a cash out with this?
No.
Okay, so
that would be a different loan.
Equity.
Yeah, it's got to be no cash out. This is simply rate and term rate reduction. So it's a nice piece to add to, your end of the year call. Again, you were mentioning, I want to make sure everybody notates this. Mike said something about equity call. What were we talking about? Share that real quick, because I think this is a brilliant idea.
Yeah, so we're in the time of year where lots of agents are doing their equity reviews. And of course, we encourage all of our agents to do an equity review. And what that is you reach out to your friends, your family, your sphere, and of course, any past clients that have worked with you, and give them a CMA. Show them what their house is worth, because we tell them all the time that this estimate is wrong. This estimate is bad. Houses don't usually sell for tax assessment. So at least in our area. So what options do homeowners have to find out what their home is worth? Pay for an appraisal or list their house, right? So we can give them a CMA, which is what we typically do if we're going to list a house. And you don't say it's worth, $459,644. You say it's roughly worth this. I just wanted to clear that up for you. You back your mortgage off of that. And the difference between those two is your equity. That can be a vehicle to help you do any number of things. Finish your basement, get the kids ready for school, take a step towards retirement. Whatever you need to do, that is there. And we need to share with them ways that they can use that. So here they can stop spending so much money on interest, and they can put some of that towards one of their other goals if we just share it. So I would include this with the equity review that you're sending. If you're not doing an equity review, it's one of the most powerful tools that you can do to maintain relationships with people. And it lets you be an advisor instead of a salesperson to people.
Well, and right there, some of the most successful agents I've ever known do these things. And because they do them, they're not out prospecting anymore. They're not doing X, Y, and Z. They just get referrals left and right. They are sitting on a referral network because their clients know, hey, this is my agent for life. I hear from every year. He keeps me in the loop. He educates me, lets me know what's going on in the market. And from there, they go, hey, when someone says, I'm interested in buying, selling, whatever, oh, you got to talk to my agent. Amazing guy, amazing girl. Just every year without fail, every, 6 months, whatever it is. He's amazing. Keeps me so educated and so smart. So this is just one more thing to sound smart and give them that extra push and information that you're the expert, that where to go anytime someone has a question.
Absolutely. And we don't have to come up with the content for this type of thing.
Yep.
Success has the tool. We just need to share it. It doesn't get easier than this for us. And, we're grateful because we have an awesome conversation to have with people, and we're able to tee it up to our lending partners. So it just makes it look like we've got a smooth running machine. We know what we're doing. We're on top of it, and we're here to help. We are going to help whether we're being asked or not. If we have an opportunity that may help you or somebody we want to share that. And that is how you are the advisor. That is how you are not a salesperson. And that is how you do more than sell a house and say, okay, hope to hear from you again. And you get to say, and I'm going to talk to you again about this and that and the other. You're just giving us the tool this time, which is phenomenal.
Absolutely.
Awesome. I'm excited, Matt. I really appreciate you taking the time to share this with me. And I'm excited to see agents be able to take advantage of this and help some people, because a couple $100 a month back in their pockets is something a lot of people need right now.
Absolutely. Especially with all the debt coming on right now.
Absolutely.
This is going to be good stuff. Really appreciate it.
Absolutely. Cool. All right. Well, thanks for the time today, Matt. I'm excited. If I can answer any questions or I can help you be pointed in the right direction to get a client to take advantage of this program, or you want to know more about it, I'm Mike Crumrine at premiermove.com. That's MikeCrumrine at premiermove.com, or you can reach out to Matt.
Yep. Matt Haberly at successmortgage.com. Yeah, I can't say that. MATTHAB as a boy, ERLIE at successmortgage.com.
Awesome. Sounds good. We will talk to you guys again soon. And thanks for this, Matt. I really appreciate the opportunity to share this.
Thanks, Mike.
Yep.